Okay, think about this for a second. What if Wall Street's absolute sharpest minds, the analysts who can move billions of dollars with just a single report, what if they were replaced by algorithms? I know, it sounds like something straight out of science fiction, but this is a reality that's unfolding right now. Artificial intelligence is completely changing how markets are analyzed, predicted, and traded. So, what does this all mean for the future of finance?
And that leads us to the big central question that's really shaking up the entire investment world. Are the days of the human analyst numbered? Are they about to go extinct? Let's dive in and break it all down.
All right, so first things first. To really get a handle on this disruption, we need to understand what an analyst actually does. See, they're way more than just number crunchers. In a lot of ways, they're the storytellers of the market. They're the ones weaving all that data into narratives that guide where the money goes.
Their research literally guides investors, influences these massive flows of capital, and basically shapes the whole story around a company. But here's the catch. Here's the key limitation. That kind of deep, painstaking analysis takes a huge amount of time. And let's be real, humans can only process so much information before they get tired and our natural biases start to creep in.
And this is exactly where AI enters the picture. It's not just another tool or a fancy spreadsheet. Nope, it's a potential game changer for the entire field of financial analysis.
I mean, look at the toolkit AI brings to the table. You've got machine learning models that can spot patterns in market data that are just invisible to the human eye. Natural language processing can scan millions of pages of financial reports in seconds. AI can even analyze the tone of a CEO's voice during an earnings call or track shifts in investor mood on social media. It turns all this messy, unstructured data into intelligence you can actually use.
And listen, this isn't some far-off, futuristic idea. The biggest names in finance are already all in on this. We're talking hedge funds like Two Sigma and Bridgewater using AI to power their core trading strategies. And investment banking giants like Goldman Sachs and JP Morgan, they have sophisticated AI systems helping out with research and valuation as we speak.
So, let's make the case for the machines. Why might an AI actually outperform a human analyst? Well, it really boils down to three huge advantages: speed, scale, and pure objectivity.
Let's put them head to head. A human analyst is careful and deliberate, but they're also slow. An AI can process that same information in milliseconds. While a human is limited in how much data they can juggle, an AI's capacity is practically infinite. And maybe the biggest one of all, we humans are prone to emotional biases. An AI, it operates with total objectivity. It doesn't get tired, it doesn't get scared, it doesn't have a bad day. In a game of pure speed and data, the machine has a crystal clear edge.
But that's only half the story. The case for humans, well, it rests on a very simple truth. Numbers don't tell you everything. The market isn't just a machine, it's a reflection of human psychology.
This quote right here really gets to the heart of it. Markets are driven by human emotion, behavior, and perception. And these are things that even the most advanced algorithms really struggle to truly quantify and predict.
This is the human advantage. An AI can process data, sure, but a seasoned analyst understands context. They can grasp geopolitical nuance, they can read the tea leaves on corporate culture, and they can decode investors' psychology. For instance, we've already seen early AI-generated reports that sound super convincing, but completely miss the subtle context that a human expert would spot in a second.
So, where does all this leave us? Well, it points to the most likely outcome. We're probably not looking at a total replacement, but more of a complete reshaping of the analyst's role. The future, it seems, is hybrid, a powerful team-up of human and machine.
So picture this new workflow in action. In step 1, the AI does all the heavy lifting. It processes these massive data sets and flags interesting patterns. Then in step 2, the human analyst steps in. They take that output and add the critical context, the judgment, the so what. And the result? It's this powerful, fused insight that neither the human nor the machine could have ever gotten to on their own.
So, back to our big question. Will AI replace Wall Street analysts? The answer is probably not. The real competition isn't going to be analysts versus AI. It's going to be between the analysts who use AI and those who don't. The ones who succeed will be those who learn how to leverage its incredible power to amplify their own uniquely human insights.
And that's really the ultimate takeaway here. The competitive edge in the future of finance isn't going to belong to the human or the machine alone. It's going to belong to the powerful fusion of both. The question is no longer man versus machine. The question now is, what new frontiers of insight is this partnership going to unlock?